Welcome, everybody. My name is Michael, and today I'm still feeling pretty weak, but let's discuss about Voyager. There's three things I'd like to discuss to you about Voyager Exchange today. One of them is that they've officially filed paperwork for bankruptcy as of July 5th. So you can see that right over here. And every bankruptcy for companies in the US has to be filed, so it's public. Voyager is going to be restructuring their business. They have over $1.3 billion in assets. And for the shareholders, there's going to be a restructuring after bankruptcy. Next point is there's an article called The Sinking of Voyager that goes really in depth into the balance sheets and into details, financial details of Voyager. So we're going to go through that. At moments, it is a little depressing. So if you're a Voyager investor or somebody who has money on Voyager, well, let's just go through all this information together. I'm sorry to hear that potentially could be losing out on money. This has happened to many people out there. And hopefully there's still a chance that parts of the money can be recovered or all. But as this continues to progress forward, the chances go down a little bit. But it has had a bailout, which puts it in a better position than some other companies out there. Still not a perfect environment. And then the last bit is going through Voyager. They suspended their withdrawals, trading, blah, blah, blah. Technically, the app's still functional. It's just that they've recently unsuspended parts of the withdrawals, but it doesn't affect most people. It does affect some, so we're going to go through all that. Anyways, let's get right into it. Okay, so starting with the last point of news, Voyager has unsuspended parts, a very, very small part of transactions and withdrawals, mainly for people who had withdrawals for transactions submitted before the suspension of buying and selling on the platform. So a small amount who already submitted it before suspension. This could be a 24, 72-hour period, however long it took Voyager to basically get everything underway. Could be a couple hundred people, could be a couple thousand, most likely smaller transactions. There's also been rumors that in addition to that, this hasn't been confirmed, but some people who had only US dollar transaction related also had that unsuspended. But the majority of people who are affected by this obviously still have their capital trapped. Maybe they did this to alleviate some pressure. Who knows why they did it, but either way, it gave a little bit of hope to the crowd. The most important thing is the fact that they've announced bankruptcy. And as we take a look at over here, July 6th, Voyager Digital commences financial restructuring process to maximize value for all stakeholders. They're worth approximately $1.3 billion worth of crypto assets, more than $350 million of cash held in the FBO account for customers, and there's claims against 3AC for more than $650 million. But we're going to be exploring this more in depth with this article that we've got over here, The Sinking of Voyager, which was written a while back. Voyager Digital's one-of-a-kind bankruptcy. Call it a Frankenstein bankruptcy, Mr. Honeywell, a restructuring partner at K&L Gates, tells reporters of what is happening with Voyager Digital. This is not a normal bankruptcy proceeding. The reason for that is similar to the general panic a couple months back before everything started crashing. Do you remember Coinbase? With their IPO, they had documentation, and in that documentation there was a paragraph about unsecured creditors. So this was part of their risk disclosures, and that's basically how Voyager Digital treats their own customers, as unsecured creditors, because according to the SEC, if there's a potential bankruptcy, when we take a look at all this, the number one thing was a couple years back, remember with ICOs, the Howey test is whether something is a security or not. If it is a security, completely different regulation than if it's not a security. So everyone tried not to be a security. Now, for the future, things might change, obviously, but with Voyager Digital, they are trying to do what Mr. Honeywell is referencing to as a SIPA liquidation. Voyager appears to be trying to stay in line with regulator expectations. If you look at the plan they filed, they're still trying to treat this like a broker/dealer bankruptcy because they put customers in a different class of unsecured creditors. It described its business as a brokerage. It's very peculiar because the type of bankruptcy proceeding for which it filed does not match the business described. Voyager was unable to tick off a description of its business from the listed choices it had: healthcare business, single asset real estate, railroad operator, stockbroker, commodity broker, clearing bank. None of that. It was checked off, none of the above. The main reason it's not able to fall into any traditional categories is it's because it's a crypto lender, and all of these crypto lenders, these exchanges that were over leveraged, are all falling into the same trap. Everyone else is in other classes. In a broker dealer bankruptcy, customers get priority for their securities account, and everyone else gets what's left. In this case, Voyager Digital is trying to do things the opposite way, where the customers don't get anything. So this is what their current plan for restructuring is, and it's subject to change. In June, Voyager enlisted Moelis to gauge buyer appetite for their business or a cash injection, and several parties indicated interest in participating in a potential in-court transaction. Voyager is calling its tentative plan a stalking horse proposal, in which Voyager will engage with third-party investors in sponsoring the plan or providing alternative financing for full or partial ownership of the reorganized company. They may want to spur other offers. They have decided to file right away without a deal, apparently with their main creditors. It's actually quite unusual, says Mr. Honeywell. Indeed, the bankruptcy filings indicate Voyager is still negotiating. The real question is, even if they filed as a Chapter 11, will customers who have yield-bearing accounts of Voyager say, I'm not just a normal unsecured creditor, I'm a securities holder, even though no regulator has said they are that? A customer claiming to be a securities account holder would be moved to the front of the line of unsecured creditors. So, regulators have been hinting that digital assets are securities, but that won't be tested until someone claims they're a securities customer, and this can be later on down in the bankruptcy process. But right now, they did officially claim that they're in part of the bankruptcy process. And you can see the paperwork. All of this is going to be linked down below, all the links. And now we're moving on to the article, the main one, The Sinking of Voyager. So it's quite a long read. Again, the link's going to be down below. But basically what happened is Three Arrows Capital obviously was this giant domino. Before that was Terra Luna situation. And Voyager Digital had way too much money invested with Three Arrows Capital, and then they were also owed money. They were owed approximately by Alameda, by Sam Bankman-Fried, the ones who did the bailout to Voyager Digital, a tune of $376 million US. This was part of what's included in the bankruptcy, the Chapter 11 filings that are linked down below, and that means that the $500 million bailout that they got, maybe the reason Sam Bankman-Fried got that bailout is because they didn't want to pay the $376 million debt. They want to make sure that Voyager does get a bailout so they survive. But in the future, somehow after this bankruptcy, Alameda wants to purchase this company, Voyager Digital, for a much lower price so they wouldn't have to pay off the $376 million. That's just what is assumed right now. Now, potentially SBF, Sam Bankman-Fried, Alameda, FDX, they could be in a bad financial position for all we know. Maybe he has way too much debt, and to be honest, there's debt in all places, from the smallest companies to the largest big boys, Binance, Coinbase, FTX, all of them, tons, billions of dollars of debt. And we're not sure if there's a company that, just like in 2008, too big to jail and too big to fail, you know? So when we take a look through this article, all of the losses, all of the profits, all of the balance sheets, there's a ton of losses. And they could have made some profits, but they spent a huge amount on customer rewards and marketing. $82 million in marketing, $182 million in customer rewards. They could have made a fair profit if they spent less on marketing and less on customer rewards, and they actually came out with a $68 million loss. So that was within a 9-month period right before March 31st, 2022. They burned through nearly $200 million in 9 months. During that time, Voyager also did a $75 million private placement share issue to try and raise some cash. It wasn't anywhere near enough. They eventually went down by nearly $145 million. It's a very interesting read, but the craziest part of the article, apart from the massive losses and the debts and being They didn't listen to the old adage of don't keep all your eggs in the same basket. They should have diversified more. They gave way too much money out. They believed Three Arrows Capital, and Three Arrows Capital itself was in a terrible position. Then they had this whole marketing thing with the FDIC insurance with the bank that they're connected with, which in two parts was completely false. FDIC insurance, we've already mentioned this in a previous video on Voyager. FDIC insurance does not protect against the failure of Voyager or any custodian or malfeasance by any Voyager or custodian employee. So the Metropolitan Commercial Bank, in this case, is the one that if it failed, then Voyager Digital, if they lost all their money that was within Metropolitan, then they would be insured up to $250,000 per account. So in total, they'd get $250,000 back. Not every single customer, not if the failure of Voyager occurs. It's the bank. And the bank is completely separate from Voyager. Voyager just uses the bank. They have no relationship apart from being a customer, really. Voyager's marketing material said, through our strategic relationships with our banking partners, all customers USD held with Voyager is now FDIC insured. That means that in the rare event your USD funds are compromised, our banking partner's failure, you're guaranteed a full reimbursement up to $250,000. Someone actually called FDIC and they said Voyager Digital LLC was not a bank. Any company with LLC is not a bank. Any claim of FDIC insurance is false. And if Voyager Digital failed, it wouldn't trigger any FDIC insurance. It's only the Metropolitan Bank. Metropolitan Commercial Bank also put out a statement that confirmed the exact same thing. The FDIC insurance coverage is available only to protect against the failure of our bank. FDIC insurance does not protect against the failure of Voyager or the loss in value of crypto or any other assets. Furthermore, for FDIC insurance limits to apply to individual Voyager customers as if they were customers of the insured bank, as Voyager's customer service agreement implies, Voyager would have to be acting as an agent or fiduciary for its customers in the placing of USD with its banking partner. Those funds would have to be properly segregated as client funds, but nowhere in Voyager's legal agreements does it say that it acts as an agent or fiduciary for its USD customers. It shows the funds on its own balance sheets, so they aren't segregated. If they are not segregated, then in the event of Metropolitan Bank failing, again, they would be limited to $250,000 total just for one account. That's it. Not millions of dollars. That's it, $250K. Everything else is a loss. So at the end of the day, Voyager overextended themselves. That's it. Most likely money's lost. Thanks for watching. Have a great rest of your day. Check out the links below for more info. Bye.